Well, howdy folks, quick update on a couple of commodities, including natural gas. So let's start with that one. This is an interesting one today. We dropped back quite sharply earlier in the day and dropped down to this level around about $2.54, 55. We had sort of 8 hours there without any real movement up and down. Two star type candles and a reversal type candle, a sort of inverse hammer candle pattern, very tiny though. And then a big move up in the last 4-hour candle, and we're continuing to move higher. I had a look at the volume profile on this chart, and I'm not going to pull it up now, but there's very little volume that actually traded during this period, this 8-hour period over here. So I'm not sure what caused it to just stop moving there and then move higher. Doesn't seem to be any trigger. In any case, we broke back up through the 20-period moving average and back up through this green resistance zone and back to the underneath of the 50 and the 200-period moving average on the 4-hour chart. And now just starting to edge higher. So funny little reversal pattern, very similar to the one that we had previous to that, with about a 24-hour dead stop or a dead halt before the move higher. Moved up into those moving averages, came back, and then 8 hours of a dead stop, and now moving up again. We've got to get through these two moving averages, the 50 and the 200, obviously playing a bit of a role here. There's quite a lot of volume that's traded at this level that we're at now. If we can get through there, then the next stop is probably this gap, this pink zone, which is the gap that still has not been filled, that got left behind one weekend, in fact the weekend prior to this one. So we've got to move up through there, and then if we can get up through there, and we'll continue to move on higher up to 285 and then perhaps up to $3. If we switch to the day chart, we'll see the bigger picture on this and this channel that we've had drawn in for quite a long time. So we're aiming for this little gap here above us at around about 275, and then up to about 285 to 287, and then up to $3. And I think on this occasion, if we do get to $3, this will be the third attempt and perhaps 3 times a charm. And we'll get up through $3 up to the top of the channel, which would take us up today to around about $3.15, still maybe $3.20, up to around about the top of this channel. So that's where we are in natural gas. So a bit of a funny day, but it is Monday, it's the start of the week, and everyone's a bit sleepy, I suppose. So we'll have to wait and see what happens. So that's natural gas. A couple of other things. We're short on WTI. This is crude oil. So we're short right from the top here at $87. If I switch this to a 4-hour chart, you can see why. We've got a sort of a 4-hour triple top. Actually, it's a quadruple top now. Our stop's above $88, just a little bit above there. And we're looking for a move back down into some of these support levels. Possibly the 200-period moving average, which would take us down into about $82 to $83 by the time we get there. So we'll watch that one very closely. At some stage, though, we'll be looking to rebuy this. So this is just a short-term swing trade, a bit of a retracement and a pullback. We might get as low as $78, $79 down to this previous swing low. But the breakout level from this sort of consolidation zone is at about $82 to $84. So somewhere in that region would be a good place to switch from this short trade into a long position. So that's WTI oil. The other one that we're short on is sugar. We're short from 2 different levels. This sort of deep red pink zone. I think that was at 25.8 cents, and then we took another short position at 26.6 cents in this region here, right at the top of this previous high, and that's moving down a little bit now. Perhaps we'll get a double top on sugar and we'll start to move down. Overall, this is a very overbought commodity, and we're looking for sugar to pull right back down. The 200-period moving average is way down at about 23 cents. We could probably get down to 21 cents and below that. So we're at 26.20 now. We're in profit on that trade. If you take the average price of the 2 shorts that we're in, that's looking quite good. Whilst we're on commodities, we need to look at wheat. And wheat continues to astound the bulls. We've got all sorts of risks from the supply side, and not the least, the war that's going on in, well, I suppose between the 2 biggest wheat producers in the world, and that's Russia and Ukraine. And you'd think because of the uncertainty of what's going on in that region with supply lines and ports and shipping and general chaos, that there'd be some upward price pressure on wheat, but we haven't seen that at all. In fact, we've just slipped down below pretty key support. We're down now at about 582. We'll call it 583. I think we're going to have to test the bottom of this channel. And if we break through the bottom of that channel, there's a long way down for wheat to go. The probable target for wheat actually is in this green zone down here. And this is a sort of a fair value. And if we continue to trade and zigzag down in this channel, eventually we'll end up at around about 450, 420 to 450, somewhere in there. somewhere down there where these two patterns meet, the falling channel and the horizontal support line, which is a long-term sort of fair value for wheat, sort of price support level. So that's what we'll have to look at. For years now, wheat has been threatening to move lower, going all the way back to 2009 with that massive spike high, and then various spike highs all along the way, including one in 2022. And if I just zoom in there a little bit, you can see we're getting these repeated wick highs and sort of twin or double tops. And we've seen that all the way down here. And we're now just breaking through this key support level at around about 580. And you can see why we're aiming for this green zone at around about 400 to 450. And if we do stay within this channel, it's quite a steep channel, but we might stay within it and eventually reach down into this green zone there, which would probably be a good buying area for wheat in time to come. It'll take some time to get there, of course. As long as there's risk going on between Russia and Ukraine, there's going to be some hesitation for this to continue to move lower. But we are seeing this determination for the price of wheat to drop despite everything that's going on. So quite a fascinating chart. The last thing I want to look at is Bitcoin, and I know it's not a commodity, but it's worthwhile looking at it, and it's also, it happens to reside on the same set of charts that I've got on my screens. So Bitcoin's just broken out of that rectangular support zone after an attempt to break higher with the grayscale ETF news and the SEC overruling and all that sort of thing. Bit of a pop, but really just up into this sort of resistance level and a very dramatic collapse back down 2 days later. And we've now seen this rectangular consolidation zone being broken out of down into these lows here. There's another rectangle here which indicates this support level, but we've already just poked through it. A little bit of support down here at about 24,750 at the bottom of these lows. But overall, this looks pretty bearish, and I think we could see a move down to this longer-term trend line, which would take us down to about $23,000. And then if we break through there, then we're probably going all the way back down to 15,000. And that's major support going back to 2022. If I just switch this over to a weekly chart, you can see this sort of very bearish looking, so I suppose you could call it a lopsided head and shoulders pattern, with Bitcoin just teetering on the edge of this right-hand shoulder. It's not really a perfect head and shoulders pattern, but it's something similar. And a breakthrough where we are at the moment would take us down to about 15,000. It's not far to go, and there's potential for this even to move down much lower, down into these levels here, which would take Bitcoin down sub 10,000, or let's say around about 10,000. This is a logarithmic scale. If I switch that to a regular scale, you can see how far we've fallen from these highs at around about 68,000. We're now down at 24, 25. So it's not an awful long way to get back down to 15,000 from where we are in the bigger non-logarithmic picture of things. And in fact, it's not an awful long way to go back down to 10,000 or 12,000, which is not far below us. So when you look at it on a log scale, it looks kind of different. It looks like we've got a lot further fall than we actually do. We're actually not too far from pretty low levels right now. So that's Bitcoin on a weekly chart. We'll keep an eye on that. For those Bitcoin traders, if you are long, you should either be considering hedging now or getting out of those long positions because it's looking pretty weak. Well, that's an update on a few commodities plus Bitcoin. I hope you've enjoyed that. We've had a good trading day so far. We've got the yen pairs moving in our favor. Gold still looking a little weak, but natural gas looking pretty good. And stocks, well, we're still short on Nvidia and looking for opportunities potentially to short Apple and maybe AMD. We haven't had the chance at those yet, and I'm still waiting to see what's going to happen to NASDAQ and S&P in the light of the enormous amount of conflicting economic news and turmoil that's going on in these markets. But one thing I do quite like is to be short on some of the chip names. So hence we're short on Nvidia, and perhaps Apple's another good bet to the short side, considering the news coming out of China with the restrictions and so on. Could all be just a lot of hot air, as it often is, but nevertheless, it's probably spooked the markets. I have to say this at the end, of course. If you found this useful, please give this video a thumbs up. And if you're not subscribed to this channel, why not consider subscribing? Have a great trading week ahead of you, and good luck.